Hello, everyone. Welcome back to the Options Professor podcast. This is Damien, and today I've got a special episode. Instead of doing the normal watch list and weekly updates, I've got a guest here. Now, Jon Watkins is a fellow trader of mine who I've been trading with, and I've been watching a lot of his techniques and some of the indicators he's been looking at, and he's been pretty consistent. I thought I'd bring him on to this podcast to introduce to you supply and demand zones. Welcome, Jon.
How you doing? Thanks for having me.
All right. So what are these supply and demand zones that you use?
So supply and demand zones are basically just the concept is riding off of institutional buy and sell activity. Retail traders, we don't really move the market. It's institutions that have the buying power to initiate large sell orders and large buy orders. And basically what I'm doing is finding zones where there's a steep drop or a steep rise in price action where those orders could be sitting. And as the stock moves through the day and it approaches these zones, I can anticipate where it may reverse either to the upside or to the downside.
Okay. So how confident are you in this method, and how often do you use it?
I use it every day. It's definitely an intraday trading strategy. You wouldn't really use it for a swing. I spend about 10 to 15 minutes before market open, and I just go over stocks I'm looking at and try to identify these zones. They're really easy to draw in. They're pretty quick. It's not an indicator. You actually have to find the zone and physically draw it in yourself, label it, change the color and all that. But
Okay.
And it works
So
on futures, stocks, ETFs, pretty much anything.
yeah, and I think you've got a video on your YouTube on how to draw these in. So I'll link to that video. We're not going to go into exactly how to draw those zones in this video. If you want to see that, check out Jon's video.
Yeah, I go over how to draw them there and examples of both supply and demand.
Cool. So show us an example of where this was useful for you in a trade and how you used it.
So this is a trade that I was in. This is SPY. I drew this zone in this on the green here at the bottom. This is the demand zone. I drew this in before market open. And so price opened and it's doing its thing. I actually got short. I think I got short right here in this area. And I got short here. I trade options, so I was taking puts. And as it approached this zone, I noticed that it was bouncing, and I actually sold out right here because of this zone. And it eventually, this eventually went on to make new highs on the day. So if I would have held it, I would have lost. So this zone was a signal to me that this could be where price action could reverse, and ultimately it did.
Yeah, and that's a pretty big drop, right, from the entry point down to your zone.
Yes, so this is about 334 on the SPY, and I sold out at about 332.60. So, it's pretty steep on the options. But I know a lot of people have trouble with where to exit or where to take profit or put their stop loss, and that's why I like about these zones is it kind of helps you give that signal. Because if you look at this chart, I mean, this is like a head and shoulders. The EMAs are down, like it's breaking the VWAP. Everything about this is screaming bearish. You'd probably be inclined to hold on to it because you think it's going to keep tanking. And of course, this stops this demand zone and then goes on to make new highs on the day.
Yeah, I see a lot of beginning traders do that. They hang on to their trades way too long, and they forget to take their profit because they just don't have a target of where to take that profit. And next thing you know, that green trade has gone red.
I always say SPTP, which stands for see profit, take profit.
Yeah, absolutely, take the profit. So what about the top side? Do you have an example of where it's hit that top zone?
We can go to Apple. I already have this marked out. So if you're going to take a trade out of speculation, let's say you want to use them to initiate a trade. Here's an example. Whenever you're approaching supply or demand, let's say the market opens and you think Apple is going to go short on the day, you can take it short at end demand and you set your stop loss, or this is supply, you set your stop loss at the top of the supply zone. And you just get out if it hits your stop loss, and if not, you can hang on to it. So this is a great example of how if you would have went short right at open, this pushed up, it literally went to the top of this zone, did not pass it, and then sold off. And even at the bottom of the zone, this is 451 on, 451.70 on Apple. This goes all the way down to 440. So that's an $11, $12 gain on Apple for about a $2.5, $3 risk, which is pretty good. And you can see too how it kind of went on into the day and it kept rejecting this zone. It was a pretty strong supply zone. And I want to note too, the more time that a stock spends in a zone, the more it becomes invalidated. And I'll usually just go in and make it gray and just kind of hang on to them for the future. And that kind of lets me know that that was a zone that was in use.
That's awesome. So you're saying this is only valid for intraday, right?
Only for intraday, yeah. And the more that the stock kind of consolidates or spends time in a zone, the more of those orders that are being, filled. So there's less orders there. So it's going to be a weaker zone because there's not going to be enough institution buying or selling to influence the price. So you have to draw them in every day for that reason. If you want to have fresh zones each day.
Okay. Awesome. And from your video, it looks like they're pretty easy to draw in. So again, check out Jon's video if you want to learn how to draw these in. I think it's really important for traders to have targets either to enter or exit trades. And it sounds like these have been working really well for you, right, Jon?
Oh yeah, they're a requirement for my day trading now.
Awesome. All right. Thanks everyone for tuning in to this podcast. This is Damien, and thank you, Jon, for joining me on this podcast this week. Thank you.
Thank you, Damien.